Okay, welcome to another video. I'm excited to do this one today because this is officially Masterclass Session 1 on the whole entire system that I use. Before we get into this, I just want to say huge credits to Traders Reality. I'll leave a link in the description below for you guys to go check out his page. I learned absolutely everything from trading from him, and the whole reason why I'm sharing this for you guys is because I believe everybody should be able to see the charts the way that I do and look at the way the charts that I've learned. Truly, I think this guys will benefit you. I'm going to be explaining everything that I've learned and how you guys can be a better trader. So let's get into it. Okay, introduction to market makers and vector candles. So what is a vector candle? The vector candles are the visual representation of the market maker's footprint in the chart. Who are the market makers, you might ask? Liquidity providers. They make it so me and everyone else can facilitate trades effectively by continuously providing a buyer and a seller. You can't buy if no one is selling. Likewise, you can't sell if nobody's willing to buy. It goes much deeper than that, but these players manipulate price to advantage their own gain and build positions like an accumulation, all to make a profit, trapping us dumb money into the wrong side of the trade whilst filling all their smart money orders all at the same time. Anyway, moving on. So the vectors go like this. Green, 200% increase in volume / buying activity. Blue, 150 increase in volume / buying activity. And as you can see for red and violet, they're the same, just different. One's buying and one's selling. So where can we expect vectors? Vectors appear all over the place, like in ranges, often accumulation, start or end of moves, patterns, and so on. Pretty much anywhere we can think of, and we use them to gain a bigger picture behind what's really happening with price, basically serving as confirmation to take a trade. So let's get into the chart and look at some examples. Okay, so here's a classic example of a way that we can read the vector candles, and likewise, for what I'm about to show you, I'll do it in the opposite direction as well. So let's say we've established the trend, and we know that prices are moving higher. We've got a higher low and a higher low and a higher highs, right? So we know that price is moving higher. But at some point they're going to turn. They can't move prices up continuously forever, right? So this is where we read the vector candles and understand what they're doing. Here's a logic I just really want to touch over real quick. So when price is breaking out of previous structure, like at this point here and this point here, it's in these levels of rise, when they break out, that you'll see green vectors appear. So if I just get this tool, in this zone you'll see green vectors pushing prices higher. Likewise, they broke a previous point structure right there. And then you'd see green vectors marking prices higher there, and you'll see green vectors marking prices higher here. So essentially, the market makers were allowing prices to move higher to trap traders into the belief that prices were going to continue moving higher, and then price eventually started to break down and recover the previous points where they had built their positions from. Now, when they're moving up the zone, they're essentially allowing the retail trader to capitalize on profit for going long at this point, right? But they don't like to give up profit forever. So when I mention that they're not going to move prices up forever and eventually they're going to want to come back down, it's at this point where the trap happens and then price starts to come back down and recovering the vectors that they left behind to the left. Now, I know that was very confusing and a lot to take in at once, so now, from this explanation, we're going to be developing a cheat sheet that you can follow along to understand. Okay, so it's all good me saying they're not going to be marking prices up forever and they're going to trap traders into the belief that price is going higher in reverse, but how do we read that in the chart and how do we capitalize on that to make a profit? So let's get into an actual example. The first thing we need to do is establish where we are on the chart. So when I make reference to this structure right here, we need to understand where we are exactly. Now, we can do that by higher time frames, but if you look out on Euro USD, they've come from this level of consolidation and they've shifted out. So now they're trying to pull back from the initial high that they set here. So after we've determined our bias and understood the cycle that we're in, and we're starting to pull back from the highs, now we need to do this. So as you can see, I've added something to the cheat sheet over here. Mark key holding half numbers, and the reason why we do this, the MMs, which is just the abbreviation for market makers, they build longs below key areas and shorts above. So the key areas are, in this case, would be your holding half numbers. So where would the holding half number be? Around here. So as you can see here, this is the range that we're stuck in. This is a half number, this is a whole number, and this is a half number. Typically the whole numbers have more weight and they use the half numbers to build around it into different whole numbers. But I don't want to get too confusing into that. I just want you now to pay attention to what you see the most. So I'm now asking you guys this as a question. What do you see more of with the vector candles? You see more red vector candles. But where are they appearing? At the highs in the move. So what does this tell us? Well, if they've been moving up aggressively for a previous amount of time, it's at some point we want to be asking ourselves, when are they going to be coming into distribution? So I know from the way that I've trained my mind to seeing how price reacts around certain levels, I can tell you this. Price has come up to this whole number once and rejected. So that's showing weakness, right? So they've attempted the high once and failed. Red vector selling off from these points, meaning there's no intent to be moving prices higher. They now come up, attempt this point one more time and fail. Currently right now they're holding at this point as support, which is this half number right here. They're not breaking any lower. But why are they not breaking lower? Maybe they're not done selling yet. Remember, they've been coming from highs. They're not going to just sell all at once and drop price straight away. They need to sell their positions gradually at the highs. That's why they come up once, twice, and then they move up, break out the zone. This is a small inducement right here when they trap traders into the breakout of this point, believing that price is going to continue higher one more time. But now what do we see? Price is rejecting this half number. It's come up to test it once, come up to test it twice. Now what do you see? Green vector, small inducement to trap traders into believing prices going higher, and then a red vector appearing. Red vector breaks through the whole number, bad sign, extra confirmation of price going lower. And then here we go, price comes up, recovers 50% of this range from this midpoint, attempts it one more time, green vector trapping traders, small inducement, violet vector breaks it straight away, they break down the zone. Okay, that was definitely confusing, but now this has given me a really good baseline to explain these vectors now and really dive in. This is where you guys are going to have to rewatch this over a couple times now, because what I'm about to tell you, every time you watch it back, you'll be like, oh, that, I got that. Okay, I understand this now. So please, watch this over as many times as you have to. So at this point, it was safe to say that they're building their positions at the highest possible point. If they're moving prices higher but not going anywhere, they're probably getting ready to do the reverse, which would be to drop price. The same would be true here. You can see at this point, this green vector came in, tried to break the midway point of this range, which this midpoint itself from the whole and half number would be a quarter level, which is also an important level. But you can see at this point, they came up one last time to trap traders into the belief that prices were going higher, and then a violet vector met that candle straight away and reversed all of that candle's previous gains. So the people at this point who went long, seeing this big move, keep in mind they wouldn't have the vector candles. They would just see this. They would see this big candlestick from this level of support that they would have drawn out, would have gone long on the break of this structure right here being broken, and they would have taken a long. But what happens to the people that took that trade? Well, unfortunately, they got met with a violet vector candle, huge selling, last attempt, last trap by the market makers to push prices higher, not breaking anywhere. The candlestick didn't finish high to itself, and then price dropped. So at that point, if you come to the chart at this point and saw that, you could have went short from the highest possible point here, the midpoint, ran a short from at least the whole number, and then target previous lows. Target a previous low like that, bam. That would have netted you a sexy return. So I know that was definitely confusing, but please watch this over again. Just to recap quickly, we established the phase that we were in. We saw an influx of red vectors coming in, so we thought, okay, well, if they're going to be selling from this point now, we're likely to see price break down and move to the downside. We established that prices were moving higher, but being met with resistance, and they were selling from that point. Likewise, price broke out one more time to trap traders into the belief that prices could be moving higher from this point. Small inducements by the market makers with these vector candles pushing prices higher, but not going anywhere. Price breaks down and forms a structure, sells, comes up to the midpoint of this range now, which would be the quarter level, fails to break higher, comes down, breaks a level. One last attempt by the market makers. Remember, it's at this point, price must have been moving so fast for them to come up and straight back down in an instant. Classic inducement by the market makers to trap traders into belief prices going higher one more time. Fails to break this point of resistance right here, which is the quarter level, which we marked off with a Fibonacci, which was our whole number. We would have entered right here and netted ourselves a sexy return targeting previous lows. Okay, boys, we'll leave the video there. I will do extra videos on this just to make things more clear, and I'll still be explaining methods like this in videos to come down. I know it's all quite a lot to take in. This video was 10 minutes long, but hope you guys enjoyed. Please rewatch it if you need to. If it made sense, if it didn't, join the Discord and I'll explain everything properly in detail for those who want to, extra clarifying things. All right, thank you guys.